Angelica, are we ready to begin? You're muted.
I was just explaining to my colleague how this is working, but we are now live.
I was
Explaining to my colleague how this is
working. Okay. Good morning, everybody. Thank you for joining us. It's been a while since we met. This is officially the April 1st meeting of the Mountain Community Capital Fund. We have not met in a number of months, I believe since January, as we've not had funding to deploy. We fully deployed our loan guarantee fund back at the end of December. And since that time, we've had a number of contributions from Maui Health Trust and the County ARPA. So we look forward to talking about that at one of our first agenda items. Before we begin and get into our first agenda item of approving the January minutes, I'm going to ask my vice chair to help me out the next part for our roll call. So if you could go around, Tim will say your name. If you could say who you are, if you're a voting member, the organization represent, and if you're an appointee or staff. So for example, I'm Jeffrey Kaplan, chair of Mountain Community Capital Fund, a county appointee and voting member. And Tim Love, if I may ask you as vice chair to go around the roll call.
Great. I'm Tim Love, vice chair of Mountain Community Capital Fund, Buncombe County staff representative. And I will hand it to Rachel Nygaard.
Morning, everyone. Rachel Nygaard here, also from Buncombe County Government and representing on the committee as your secretary. Tim, am I passing back to you, or do I need to pass on?
Yeah, let's go back to Tim. Let's make sure that we go down the list and get everyone on the roster. Thank you.
Sounds good. Nikki Reed.
Good morning, Nikki Reed. I'm with the City of Asheville as a staff representative here, and I am a voting member.
Thank you, Nikki. Dee Williams.
One moment. My name is Dee Williams. I'm appointed by the City of Asheville, and I'm a voting member.
Thank you, Dee. Frank McGowan.
Frank McGowan, City of Asheville, Finance Department, and I am a voting member.
Maui Bank.
Hello, I'm Maui Bank. I am a county appointee and voting member.
Thank you. Tara Brown.
Good morning, I'm Tara Brown. I'm with Self Help. I'm the Director of Community Engagement, and I am not a voting member.
Thank you. Yasleen Gonzalez.
Good morning, everyone. Yoselin Gonzalez with Mountain Biz Works, and I am a non-voting member.
Thank you. And then there are a few folks that we want to include, as well as some folks that I don't know, so I'll be coming to you as well. But first, let's go to Angelica Driver.
Good morning, Angelica Driver, the City of Asheville's Business Inclusion Manager and the staff support role non-voting member.
Next up, I'd like to go to Ricardo.
Hi, everyone. Ricardo Acerto from the City of Asheville Communications Department. I'm not a voting member.
Thank you. Next up, I'd like to go to Matt Raker.
Good morning, Matt Raker, Mountain Biz Works, work with Yoselin, not a voting member.
Thank you. Kelly Foster.
Good morning, Kelly Foster, Mountain Biz Works, Asset Quality Manager, work with Yoselin.
And then I believe the last person on my list is Francia.
Good morning, everyone. Francia, Business Inclusion Coordinator, non-voting member.
Very good. I think I've made it through the attendee list. Is there anyone I missed? If so, I apologize in advance.
This is Rachel jumping in for clarification. Francia, are you with the city?
Yes, ma'am.
Okay, perfect. Thank you.
Excellent. Well, I believe we've covered everyone. To those that are joining us for the first time, welcome. For those that haven't been here in a while, welcome as well. Jeff, back to you.
Thank you. I didn't put anything under old business. Met in 3 months to 4 months to have old business. It's on new business. If I could ask our guest, Matt Raker from Mountain BizWorks, who's been quarterbacking much of the funding, specifically from the county ARPA $1.25 million grant for MCCF. Our first agenda item is a funding update. Matt, if you would give us an update of the process of funding, where we are in transition. And when you wrap up, I would ask to discuss the health trust funding transition. That'll be our first agenda item.
Well, good morning, everyone. Thanks, Jeff. Matt Raker again with Mountain BizWorks. So just as a little kind of reminder context for us, over the last couple of years, we've seen really great results and impact from the Mountain Community Capital Fund facility and kind of the pilot funding that we had in place for that, which we have fully deployed now as of late 2021. And so there was a opportunity and a real need to look at how we can continue to expand this facility to really fully kind of address, I think, kind of the opportunity we have in our community through this resource. And so we worked together to prepare and submit applications to the Buncombe County ARPA funding for pandemic recovery and resilience, and are very pleased that the county commission and staff and everybody that was involved in the process concurred with the importance of this work, and actually approved it twice in 2 different forms. Originally, it's kind of a technicality. Originally was approved directly to Self-Help Credit Union, where Mountain Community Capital Fund resides as our kind of fiduciary for this, and then the federal guidelines and guidance from Treasury came out on the funds, which made that one really a little bit uncertain about how it would fit with the program. So we went back to the drawing board, and fortunately been able to redesign the program to get us to a lot of the same outcomes, and bringing some other matching funds there that Mountain BizWorks is able to bring to the table, so that the investment will now come to Mountain BizWorks. It's still the total award is $1.25 million. 100,000 of that will be for kind of administrative and operating cost. So there'll be 1.15 million that's available for kind of direct loan capital, but that'll be leveraged with other funds. So the actual lending amount will be a little bit higher than that. But with the other funds that we're able to bring to the table, BizWorks is committed to providing or contributing 1.15 million to Mountain Community Capital Fund, basically over a 2-year period as we make the loans under the program. So we're so excited that we can kind of get to the same place. We just kind of move which funds are funding which part of the projects here to stay compliant with the overall guidelines. But so yeah, we're real thrilled that will be. It's not quite as as clean as the kind of like the Dogwood Health, where it's upfront 450. We'll hear about it just in a second. Contribution. This will be making them over time. As we make loans, but the process for the Mountain Community Capital Fund will work the exact same. So it's just that we'll be making those contributions over time. But so happy to if there's we've got a couple folks from the county on, if y'all want to share any more information on this, or if there's any questions. And I'll just note that we've also, as a group, have also applied to the City of Asheville's programs, and those funds are still under consideration. They're still working through their process, so we're still hopeful that will be favorably received, and we'll keep folks posted as we get more information on that front.
I'll jump in. This is Rachel. Thanks to Matt and your team for your flexibility and creativity in matching the Mountain Community Capital Fund structure to these federal recovery funds, which, you know, it's been tricky as guidance has been sort of coming to us in bits and pieces. And so we do think that we're there thanks to the hard work of all of the different partners. And by there, that means nearly ready to sign a contract. So timing, I know that we shared with this committee several months back. We hoped it was going to move faster, but we do feel good about where we are now and are about ready to launch. Matt, do you remember the period of performance that we landed on for that? Starting April, maybe?
You would have to go back and double check. It was either April or May, but yeah, it was really soon.
Yeah.
And just want to do a real shout out to Self-Help Credit Union. They've been super helpful and supportive throughout this process and kind of navigating it. And so Tara, thanks to you and others on your team that have been on calls helping us work this out.
That's great. I'd like to chime in just real quick because, navigating this federal guidance, it sounds like bureaucracy, but we were able to figure out a way as a team, which is great. But I think one of the really exciting things, the reason we ran into an issue at all is because, Treasury requires funds to be paid out by the end of 2026. And because of the nature of this program, there was the potential that we wouldn't have to pay out, loan guarantees because our loans would not default. And so I think that's like kind of a really subtle thing that we should kind of acknowledge. Like this program, we're not expecting defaults, we're expecting success. And because of that, that created kind of a bureaucratic challenge for us that we got through. But I think it underscores like the importance of what we're doing. Right, helping small business owners advance, their businesses and not default. So I think that's really exciting, and I just wanted to mention that just for a minute because that's why we're here, right? So thanks everyone.
Thank you, Matt, for that update. I'm Tara Brown again from Self-Help. Yes, we've been very happy to work with Mountain BizWorks on these applications. So in addition to the Buncombe County funds, ARPA funds that will be awarded, and the City of Asheville funds that we've applied for, Self-Help applied in collaboration with Mountain Community Capital Fund and Mountain BizWorks for Dogwood Health Trust funding, which we've now been awarded. It's $450,000 that will be available right away. So that's great, and allowed us to have this meeting where we might actually get some applications to review. So hopefully that will happen. We have to report results over 2 years in terms of the typical economic development indicators, jobs created, businesses impacted, things like that. So I'm happy to do that and happy to put this funding to work.
Can you guys hear me? This is Jeff. Can you hear me? Am I coming through?
Yes.
Oh, good. Okay. I didn't realize when I called in I had to unmute a different way. I apologize. That's why I was trying to express my gratitude and appreciation for Self-Help, to Mountain BizWorks, to Dogwood, and to the county. You all heard me in the past talk about entrepreneurial competencies, like kind of probably ad nauseum. And two of them that we track and measure are creative problem-solving ability and tenacity and perseverance. And when I look at this group and the people who've been involved to help secure this kind of funding for these businesses, I just see immense efforts in both those areas of perseverance and creative problem solving. So I really want to express my personal and professional deep gratitude and thanks to to everyone, Mountain BizWorks, Self-Help, Dogwood, and the county. And I'm very optimistic the city's going to come up too. Very optimistic. Is there any other items or any commentary on funding updates?
I do have a
Yes.
quick question. This is Maui. For the city ARPA funding, do we anticipate kind of some similar challenges with, since it's kind of coming from the same ultimate source, and are we doing anything a little bit differently with this application so that we can expedite those funds a little bit quicker than with county funding?
That's a great question, Maui. And yes, we would probably need to structure it the same way as with the county funds.
This is Rachel. I'm looking at Frank to see if he's unmuting, but I do want to share that the city staff and county staff who are working on managing the American Rescue Plan Act funds do collaborate regularly, and so we can benefit from those structures that we already set up and share it with your team.
Rachel, thanks for saying that. And to be bluntly honest, I've been on the periphery of this for the last couple of months as the city is working through reviewing the funding. So I can't speak to where we are in terms of the particulars with ARPA. I'm sort of waiting for the decision to be made, and I know that it is a council item that is upcoming. It is finally scheduled, so hopefully that date does not move. And once the funding award is made, then I'll be working with Kim Marmon-Sachs at the city to help get those subrecipient agreements in place. But each one will have its own particulars. And yes, Rachel, we're happy to let y'all be the guinea pigs over at the county and help us as we sort of get guided through your lessons learned there.
Very good. If there's no other comment, go ahead.
Jeff, before we move on to the next item, I just wanted to note, I think we skipped the approval of the minutes.
Yeah, I apologize. I just thought to say that. Please continue, Angelica. Thank you.
Motion to approve the minutes.
Second.
All in favor, if you could raise your hand or use the hand icon. And Vice Chair Love, if you could let it be known when that's cleared. So all in favor, if you had a chance to raise your hand or say aye. And are there any opposed? I'll assume silence means that the motion passes.
That's right, Jeff. I didn't see any opposed.
Okay, very good. Motion passes. Our next item on the, and thank you again, Angelica. I apologize for missing that. Next item on the agenda is going to go to Yasmin Gonzalez to discuss a quarterly report. Yasmin, unless you're able to share your screen, you may want to share that document with Angelica or maybe Tim, so that everyone can see the quarterly report that you sent out.
Yep, I will. I wasn't sure who to send it to, but I will send it right now.
Well, this time, let's share your screen and make sure we get Angelica a copy so it can be part of the attachments, like minutes from the agenda. And as a reminder, everybody, Mountain BizWorks every quarter is responsible for producing quarterly report. You're going to see a new format, a new template that was produced by our colleague and friend, Jessie Maxwell, who's no longer with Self-Help, but one of the last things she did was help tee up the MCCF with some lessons learned from the Charlotte group. And this new template you'll see, I think, does a great job of addressing a lot of things we need to have an eye on, a snapshot of, things like defaults or trigger points or percentage of startups, etc. I'll let Yasmin walk through it. Thank you.
Yes. Well, I can go ahead and share my screen. But Tim, Angelica, you should have that document.
I don't think I had received that. When did you send it?
I just sent it to you right now.
Okay, it might be updating. I will add it to the documents though.
Okay. Can everyone see that document pretty clearly?
It looks pretty small. I don't know if others feel the same, but
Yes, if you could enlarge it.
Is that better?
Can you bump it up one more?
Let's see.
That's perfect.
Okay, great.
Thank you.
Okay, so quarterly report. I know we hadn't met prior to review this, but this is the new format that was created, and this is how we will be reporting from now on. And so new loans this quarter, those were 4. Total loan count is 19 over the life of the fund. Total dollars lent is 694,680. And that is dollars lent, so that's not including the guarantee. The guarantee used is the 560. So the outstanding loan count's 19, so we've not received any payoffs yet. Outstanding loan balance is a 609. And outstanding guarantee amount as of 3/31 is a 517. This maximum lending amount will have to be adjusted due to the new funding coming in. However, I didn't want to do that until we kind of met and discussed that further. So 31% of all the loans that we've done over the life of the fund is 31%. As you can see, cannot exceed 50%. So keep below 33, which we're okay at right now. We do have 2 delinquent loans, and we can talk a little bit further about that. We can give you an update. We do have our risk asset manager at Mountain BizWorks join us today, so she can give us an update, and we can most likely talk about that at the end of the meeting, if that's okay, Jeff. And so that is a total amount of 65,566. That is 9% of the outstanding balance. The guarantee allocated is 55,731. So that would be 85% of the delinquent loan amount. As of now, we don't.
Yes, Lean, will you repeat those 2 figures, the amount delinquent and the guarantee associated with it?
The loan amount delinquent is 65,566, and the guarantee, which is 85% of that, is 55,731.
Yeah, that was 9%. Is that right?
That was 9%. Yes.
Okay, thank you.
There are no charge-offs this quarter, so we have not charged this delinquent loans yet, which is why they're not listed on the charge-offs. We have not received any payoffs this quarter either, and 100% of the loans have been to Black or Brown owned businesses. 1 to Latino or Hispanic borrower, and which is 5% of the loan or the fund, and 9 of those businesses have been to women owned, which is 47%, and jobs created or retained have been 104 so far. And then I'll open it up for questions.
I'm gonna ask a question I expect to know the answer to, but I'm gonna ask it anyways. So, Yasmin, as we get an influx of upwards of $1.7 million between Dogwood and County ARPA, that's really going to change our delinquent number, isn't it? I mean, I imagine you'll automatically factor in those increases and they'll change our proportions.
Correct. Yes.
Yeah, very good. Thank you.
Mm-hmm.
Yasleen, forgive my either ignorance or forgetfulness. UPB stands for what exactly?
It stands for, where's it at? Upstanding principal balance.
Okay, thank you.
Mm-hmm.
By the way, I really like this format.
Yeah, it's very clear and lists really a lot of the information we need to know. I liked it as well. Hi, Maui.
Hi. So similar to Jeff's question about the delinquent number, I was like a little bit concerned about the startup proportion because we're pushing up pretty close to that 33%. But once we add the additional funding numbers, that'll kind of free up some more space, right, for startups.
Mm-hmm.
Okay.
Question, Maui, and also notice the definition of startups here are businesses with less than 12 months of cash flow.
Right.
Got it. I think the line might be slightly off because it says number of loans to startups and it says over 12 months of cash flow. If you see under the data points column there, this is just a small technicality, but if it's less than, then maybe we should change that little caret.
Yeah. Yeah. I will change that.
Good eye. Good eye.
Any other questions, comments?
Yeah, I know you brought in, I'm sure, Kelly, if that's right, to discuss the delinquency.
Yes.
So you said you wanted to discuss at the end of the meeting. So my question to you is, are there any new loans to discuss in today's meeting?
There are not.
If not, then I think it'd be more appropriate to include the delinquency as part of the quarterly report. And the last part, and then the last agenda item will be discussing Jesse Maxwell's final recommendation. If that's okay with you guys.
Makes sense to me.
Okay, so Kelly, welcome to the MCCF, and Yasmin, Kelly, if you want to walk us through this next part, that'd be great. Thank you.
Yeah, so I brought Kelly in because she is our risk asset manager. So she is the best fitting person to talk about the delinquent loans. And I can assist us or answer any questions as she kind of gives us a quick update.
Yeah, so yeah, thanks for having me today. Just to clarify, the two delinquent loans that we have, it's actually to the same business. So we're talking about one business owner. And we've been working with the business owner for well over, I think, 6 months or so at least, on the past due status. We've kept the Catalyst Committee updated with it. What's happened is, I think it's a situation we've provided technical assistance. We've been out to the location to provide technical assistance to try to determine what is wrong, what we can do to assist to help the client. Unfortunately, I think this is a situation where the client's just not responding, and we've tried everything that we can possibly do. From the risk perspective, when I generally approach it, we uncover what obstacles are there, what we can do to try to alleviate any cash flow issues, and we've done that, and there's been no response. So as you know, once it becomes more delinquent, you have to escalate collection. So we had gotten to the point where I'd sent a demand for balance, and I did run that by the Catalyst Committee. There was really no response from that. We did follow up and make a site visit after that, discussed again what the problem was. The client stepped up and said, hey, give me another chance, I will, you know, bring the account current. There was no follow through with that. There's been multiple return drafts where we've tried to draft the account. And so it unfortunately it's escalated to the point to where we just cannot get a response. We cannot get this person to follow through with any of the payments. So we did have to issue a second demand letter. So where we're at right now is the demand letter expires at, I think it's the first, which is today, which would be 5 o'clock today on the 2 accounts. And if he doesn't pay the accounts off in full by today, then the next step would be to move forward with liquidation on that. So any questions or comments?
I do.
Sure.
Okay, it's D. Williams. I'm just curious, was that loan one of the ones that was refinanced or merged two loans together? Because I had some questions about one or two of them that have been done like that. Generally, when that happens, there's a cash flow issue from the get-go. And so that's what really concerned me and why I did ask that question. Is this a refinance and a merger of monies that this person was lent? This is my question.
I'd have to, I don't think it was actually a refinance. I think he had a previous loan.
Yes,
that was
that's what I
combined with
meant.
it. Yeah. Yarlin, you can correct me if I'm wrong on that one. But
Yes, it was originally a refinance,
Okay.
and it wasn't, you know, it was part of, he needed additional funding. So we did a refi, a portion was a refi, and there was new money as well.
Okay, generally when a refi happens, it's because there's cash flow issues. So at any rate, that kind of answers my question, because I was holding out. That was one of my triggering points that I was thinking of. We should have a trigger point when there's a refinance. There's always a cash flow problem, generally. And I'm not saying always, but generally that's the reason why a refi is done. Thank you.
yeah. And just to clarify one point with that, to be fully transparent, when I had went to do a site visit, I had taken someone else to the office with me, and the client had said that he had the funds available then, but he had his rent due, and he actually had his cell phone and showed my colleague his cell phone with the checking account balance, and there was plenty of money in the checking account to pay it. So I part of me thinks that is it the intent that first I can't figure out why, if this is so serious, why, if you've got the funds there in some account, you're not at least trying to work with us in some manner. So I don't know that it's actually a cash flow issue. When I approach a delinquent account, one of the things I do try to do is get the financials, P&L or whatever it is that they have, so that we can look at it and see how we can help them. And the client has not provided any of that information to us, and we've requested that several times.
And who generates the P&Ls, the client, or is it the tax returns, or both?
It could be both. When I usually I take what I can get. Usually if it's a delinquent situation, it's not the tax returns, because that's as of the previous year end. I want something current, as of the date that I'm trying to look at it, or, at least at the previous month end, so that I can, see what we can do to try to help them. So.
Okay, if it's somebody, these people that you're dealing with, this client, are they someone that deals with quite a few receivables?
Mm-hmm.
I mean, as far as a contract is because I'm hearing that kind of when you say what was in the bank account. I have had a lot of clients, they'd have money in the bank, but they'd have a lot of money going out too. And usually the lump sum would be derived from a contract. I'm just
That's not the case, Dean. That's not the case in this.
Yeah.
With this business.
So they have money in the bank all the time, is what you're saying. You saw the balance and you saw it, but
we're not able to say yes or no to that question, because as Kelly mentioned, he has not provided any financial statements to us.
And how long, when's the last time you got one? I hate to be specific, but I hate to see people get in trouble. And then I guess I just want to know how long to to intervene if we had to. You know, I don't know how long this has been going on. I don't like to see people fail, especially not in this situation.
Right.
What's the last P&L you got from how long ago was that?
Oh, it's been well over 6 months.
Oh God.
Yeah. It's in all honesty, I think it's a situation where the client they're not cooperative. I think if the client would be cooperative, that we could definitely work something out. And I don't know how much I can say on here about the meeting with the Catalyst Committee, but I'll let them know, what was going on with the client to get feedback with the client. And it seemed a general consensus that the client historically had been difficult to work with in some situations. So, that, I mean, our top priority, what I hate to see a business fail. And I can assure you, once, if it ever comes from me and from Mountain BizWorks, if we've ever reached to the point to where we issue a demand letter, one thing I can assure everyone on this committee is that we have done everything we can possibly do. I mean, whether it's because we want to provide that support, we do not want to see these businesses fail. And it's just heartbreaking to see that. But we're at the point, it's just, if we cannot get them to respond, he did respond, because the demand letter expires today at 5. He did respond a couple of days ago, and had sent an email that they could pay, I think it was like in 3 weeks, but like one payment. The problem is that has been the trend, to make these promises that they would pay, they don't follow through. So there comes a point to where we have to draw the line and say, no, we need to stand firm on this. You've not followed through in the past, and that's where we're at right now.
And I do think Maui and Rachel had some questions as well.
Thank you. Yeah, it sounds like you guys have done a lot, whatever you could with this particular instance. And I'm always kind of looking at it from a big picture standpoint of what can we learn from this going forward. And one question I had was, and again, this will kind of change as we get more funding, and it kind of dilutes, these percentages. But what safeguards, if any, do we have to kind of cap out lending that we do to a particular owner and or business, so that we don't over concentrate risk on, the financials of one entity that could affect, have an outsized effect on the portfolio? Because this is, 9%, which is not a small portion of the portfolio if you're looking at it from a portfolio and diversification standpoint. And then one kind of related question that I thought of is, do we also track common ownership between these companies? That's probably very low likelihood, but just in the instance that a person started one company and then have part ownership, or in another company, and they were both getting funding, and somehow that owner has some sort of financial hardship, it can sort of have a ripple effect on parts of the portfolio. So any thoughts on that would be welcome.
Yeah, so to answer the first question, as far as concentration, I think that's a very valid point, and something that we do need to make sure that we focus on, at least on a monthly basis. And this situation, I don't think it's more of a concentration risk in a specific industry. I think it's more of, when we're doing the underwriting and the evaluation, we need to make sure that we're focusing on the ability of the client to manage the business, to provide financials, to make sure that they're on top of the financials. I'm not saying that this particular one could not do it. I don't know if it's a could not or a would not situation. So, I mean, I think that addresses the concentration. Now, of course, if we start seeing a lot of loans that are skewed to one industry, then yeah, we need to make sure that we're keeping a careful eye on that. To answer the second question, that I think I understand what you're saying, is that if there are additional businesses, for example, if we have one client and they decide they want to open a different business that may be similar, but they're requesting funding for that, that is absolutely something that we definitely keep a lookout for in due diligence in the underwriting. The way we approach it is, if we were to consider something like that, we want to make sure that we look at the cash flow individually for the business, and then a global cash flow for the whole thing, and that way it just lowers the risk and it protects us to make sure they can, support the debt service there. So.
Thank you, Kelly. And just a quick clarification on my first point, the concentration is on the ownership, not necessarily the industry. So, for example, in the future, if we had some sort of guideline in place that a particular owner and or founding team can't represent more than 5% of the portfolio or whatever, so that we, again, don't put undue risk for that business. And if they were to default, like, in this instance, it puts that part of the portfolio at risk. Yeah. So that was it.
Sure. The thing was, I don't know if it's me or you that it was freezing there, but yeah, no, I think that's a valid point to watch that and monitor that as well. Any other questions?
Hi, Kelly. This is Rachel. Thanks for walking us through some of that information. My question is a forward-looking question. You talked us through the different collection steps and where we are today. What happens? This will be our first time as a Mountain Community Capital Fund going through the guarantee process, the sort of the write-off or the claim from MBW to Mountain Community Capital Fund. Can you or others walk us through what to expect timing or process-wise on that?
I may have to have y'all and hop in here. I haven't read in detail the claim forms. I can tell you typically I handle our 7A program also, and we have claims there. The way I normally handle it, once there's certain legalities, steps that you have to go through as far as notification, with the client. So for example, if they don't honor the demand letter and pay the account today, the next step would be liquidation. And that's something we'll have to meet internally with management to determine the best steps for liquidation, because you don't want to embarrass the person. You don't want to show up and make it seen if it's a site visit or whatever. But the next step is to liquidate the collateral, and we determine the best way to approach that liquidation. And then of course from there, to market it, make sure we're fair with marketing it to get the highest amount we can. Once we do that, we apply that as a principal reduction to the account. And then to my understanding, after we apply that principal reduction to the account, then that's when we would file the claim. As far as timing with that, it varies on the type of collateral it is, and how we have to market it, or how we have to take ownership. And it also varies as far as if the borrower is cooperative. If they're not cooperative and we have to go the legal route, legal intervention to actually take possession of the collateral, that's something we have to look at and weigh the cost benefit on that. I would say usually, probably typically maybe 30 days once we begin the process of liquidating. It would be a target of 30 days or less, but it can vary depending on the circumstances.
And I do want to add, this would be the first claim. So as far as the process goes, that would be something that, we would have, the committee would have to discuss briefly. However, we do have a claim form. And I don't know if many of you have seen it, but essentially, we are meant to report to the committee and show what steps we've taken to try and resolve the situation and or help the client. And in that instance, we would essentially be presenting a claim form to the committee, and that would be completed by us as well.
Thank you.
Tara, thank you. Have a question?
Thank you. Yasmin maybe just answered my question when Kelly was talking about liquidating collateral and things like that. I just meant in this case, isn't the collateral our fund, and is there additional collateral, or is our fund covering the whole collateral that was needed for the loan?
Yeah, so as many, the purpose of this fund is to bridge that gap in collateral. So in a lot of these cases, there's not a whole lot of collateral available. However, as part of the, in order for us to submit a claim form, we, on the agreement, it does say the lender would have to liquidate any collateral if available. In this case, it's very minimal. However, based on the agreement, that's the next step here.
Thank you.
Sorry, getting background noises here.
Thank you, Yasmin and Kelly and everyone for your questions. This is where we knew this day was coming, right? Like we knew at some point it would be this kind of situation. When we review these loans, we remove all personal PII, right? Identifiable information away from the application. It's just business, the goal, and the loan amount. And now we're at the point where it really does become about the person. So I appreciate Kelly's comments about the sensitivity and tact to go about any kind of collateralization and that process. And also, as I'm reflecting on this, I really want to give D. Williams a shout out for the insight regarding the refis. And again, this is I think was our first one in situation, but every time our committee will get sharper and smarter with experience. So Dee, thank you again for seeing that potential red flag, as you called it, a trigger point early, and something that our committee will be stronger for in the future. And thank you again for your insight. Any other commentary on quarterly reports or the default, anything at all on this agenda item? If there are no comments, last chance, we're moving on to the final agenda item, which is the Jesse Maxwell recommendations. Tim, if you could give me an audible go ahead if it's time to move on.
Yep, I think we're good, Jeff.
Okay, thank you all so much. Last thing to discuss is an email going back to February 24th from Jesse Maxwell. It's a chain there under the subject line, MCCF docs, accurately named. Jesse was helping us review our documentation, identify key highlights, and made a few recommendations of changes. The main one being using this new reporting template, which you all just saw. I think we all agree that's a really strong quarterly report template that gives you a snapshot and bird's eye view of what we need to know, what we need to see. There's a comment in here that our services and duties agreement expired in 2020. Rachel, correct me if I'm wrong, but I believe that was actually extended to 2025 by prior chair Lynn Smith. Is that right? So you're not out of compliance?
We have a current agreement.
Very good. In Jesse's email, she gave a few TLDRs, too long, didn't read highlights of the services and duties agreement, much of which we recovered and are well aware of. But one sticking point I do want to comment on is the credit underwriting committee. This group has been back and forth on the appropriateness of that, and we decided some time ago that we didn't need a credit underwriting committee because all but one person would be on that committee. And then regarding the logistics of when you transition in and out of these meetings, it would all be on a public board anyways. And Rachel and I were discussing this email, and she had the insight that bylaws and procedures cannot be changed by our committee. However, Rachel, if I'm going off the rails here, you're going back in. The services and duties may be changed according to our own board voting. So, for example, what I'm getting at is we have a credit underwriting committee on our our services and duties agreement, but we're not in compliance with that because we're not using it and floating it into our full committee. So what we can do is move all of those responsibilities, which if I pull that up, make sure I got them all right. We're doing the loans above $70,000, and that loans 50 to 70,000 are reviewed up to 12 months after closing, we have the ability as a board to make those responsibilities part of the entire operating committee, and then removing the credit underwriting committee as a subgroup that, again, we're not currently using. Does that make sense, folks? Am I again, Rachel, am I off the rails? Do I have this right?
I'll jump in. The services and duties agreement was an official contract that was approved by governing boards, and that one takes more time and is more complex to update. So we want to make sure that we're doing that when there are substantial changes. The operating committee rules of procedure is more of an operating document that our own board can update as needs of the group evolve. From my perspective, I see Tim nodding, so I think you see it similarly.
Thank you, Rachel. That's right. Okay, I look at it. I'm looking at it wrong. So, services and duties. That's the contract with the state of the county, our lenders, and then the other documents, the operating committee rules of procedure, where we have more autonomy to decide our own rules of procedure. Is that accurate?
Yes.
Very good. Now let's push this back onto our committee for a brief discussion, how you would all feel about moving the credit underwriting committee responsibilities under the full committee and removing the title of the credit underwriting committee so that we can stay in compliance.
This is Rachel. I think it would be manageable for this group to get a markup version, like a proposed edit version for our next meeting for the group to consider.
That sounds appropriate. So marking up the operating committee rules of procedure under the section of credit underwriting committee. I'm happy to take that on unless anybody else feels so moved or motivated to leave that markup.
You just got appointed, Jeff.
Again, I will take the silence as approval to do that. So for next meeting on the agenda, I'm going to write that down. It's review new operating committee rules of procedure. Rachel, is there anything else under rules of procedure from Jesse's minutes that our committee should discuss?
I don't see anything offhand. I do wonder if we are going to have to update the services and duties agreement, the more complicated one, because of the dollar amounts that were included in there. And each time that I think about how to approach that task, I get a little stuck. I wonder if Nikki or Frank or Tim have looked at it from the government perspective.
I'll chime in. That the complication is having to go before the two boards and time that. It's just a
I guess what I would ask Tim is if you and I could take a look at whether or not we can continue operating as is under the current agreement with the new funds,
sure.
or if we feel like it has to be updated.
There may be one additional update needed with the new funds coming in terms of the allocation of losses. I believe it's section 9.3. Karen from Self-Help had brought that up, and she's on vacation this week, so I'm covering, but maybe that's something we can also look at if that needs to be addressed.
Is that in the services and duties agreement, Tara, or the rules of procedure?
I'm gonna have to double check.
It looks like services and duties to me under current maximum lending amount. So you need an amendment to adjust the max funding amount. That's right, word for word out of Jesse's email.
Rachel, I apologize. I had a little bit of a background distraction here. Could you repeat your question?
We have a contract in place called the Services and Duties Agreement that has been signed by City Council and by County Commission, as well as each of the participating lenders and the holder of the funds, which is Self-Help Ventures Fund, which is why it's complicated to update. However, now that we have additional funds in Mountain Community Capital Fund and we're not working off the initial 450,000 only, it seems that that document is going to need updated. Self-Help is pointing out that there's a section around maximum lending amount that would need review. I was wondering if the city had taken a look at that and had a recommendation on updating it.
Not yet, but I think we can before the next meeting.
And is that next meeting the second Tuesday of the month? Is that right?
I'm sorry. I meant, I think we can look at it before this next meeting, not the next council meeting.
Gotcha. Okay, very good.
Our lead time to get on council is sometimes as long as 2 months.
That's one of my next questions then. To get the amendments approved to address the new allocation or new fundraising, that would be going to both city and commission meetings, expressing that we've fundraised an additional, at that point, $1.7 million, and to amend our services duties agreement. And it will be asking the city and the county officials to approve that as an amendment to the agreement. Is that right? Is that what we'd be asking?
Hopefully there's a way to structure the services and duties agreement so that it doesn't lock in the dollar amount and we can have a growing fund without having to take it back to the governing boards. I think the reason that it was so essential that the governing boards approved that dollar amount was related to their initial investments, which would remain intact. I would be willing to meet with whomever wants to be a part of reviewing that agreement and proposing any edits for our own team's review before we try to take it to the different parties for sign off and approval. I'm kind of thinking that's Tim, Frank, Tara / Karen. Does that sound right?
It probably involves, originally this came out of community and economic development. So I would expect that we'd have representation from that department.
As in Nikki?
Nikki. Yeah, one more thing for Nikki.
My invite list will be Tim, Frank, Nikki, Tara, Karen. Sound good?
Sounds good to me, Rachel. Thank you. With that, that's our last agenda item. Thank you for having the action item to lead that charge, Rachel. I've got my action item to review the operating committee rules of procedure under underwriting committee. And unless there's anything else, we are 1 minute until time. Anything else somebody wants to get out in the last minute? All right, if not, I want to thank again Matt Raker, Kelly, we had some several guests from the city that I'm sorry I don't have your names in front of me. Thank you for joining us today. Anything else before we adjourn? Last call. Okay, and we'll see you all on the first Friday in May. Tech check at 9. Meeting starts at 9:30. Thank you all so much.
Take care.
Bye, everybody.
Bye.
Thank you.